and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we update you about all the latest on the moves of stock markets in terms of the sectors and the stocks that are buzzing the most in trade today. Also to help you understand what should be your investment strategy as we begin this new week. Well, we've started off Monday on a high note. The Sensex and the Nifty comfortably in the green. Talk about the Sensex first. There's a 300-point uptick that you can really see on that index, 61,648. There's a 0.5% up move that you can see. We're trading almost at the day's high level as well. About a 95-point gain for the Nifty 50 today, 18,364. Looks like the sharp moves are being cheered all across the street as well, because barring the two indices, rest all of the sectors are comfortably in the green. So the IT stocks and the PSU banks, if you leave alone those two sectors, rest of the sectors are actually showing good momentum. The autos in the faster lane today, over a percent gain. FMCG back up again, 1.15% too. There's slight gains coming in for the metals pack, for the pharma, for the royalty space as well, and the private banks and the financial services are also moving up. It's the PSU banks that were rising in the previous week despite the overall somber mood in the markets. They are seeing some profit booking really taking place, but the rest of the sector still up in trade. Talk about the broader markets as well. Well, the mid and the small cap indices are also up, almost in tandem. The small cap index up by 0.6% odd, 0.3% uptick for the mid cap index today. The India VIX has slipped a bit, 0.7% down. It's trading at 13.9 odd levels in today's trading action as well. So which are the top gainers today? You're seeing the auto space really gain all the limelight in today's trading action. Is Eicher Motors, M&M. Both of the stocks are up by 2.5% in trade. Apart from this, it's Adani Ports, Dr. Reddy's, Bajaj Finserv that are also moving up higher today. On the losing side, Tata Motors is clearly not participating in the auto move today, 1% down for that one. The IT stocks continue to drag and lag, and that's also something that we will discuss later on the show. So you have the bellwethers, Infosys, TCS, and also Wipro down by over 0.5% in trade. And BPCL, that's the one that's dragging as well. There's the oil and gas drag that you're looking at overall speaking. Let's welcome our guest for the day. Rajesh Palbia joins in from Axis Securities. He's the head of technicals research there. Welcome, Rajesh, and thank you so much for taking the time out. Good morning to you. Another week started on a good note, but the big question is, will the momentum sustain? Your thoughts on the overall market texture that you're looking at?
Good morning, Sakshi. So, yes, today we have seen some pullback action from the lower level, but still, if you look at the overall setup for the Nifty is still trading below 20-day moving average. And if you look at from the derivative perspective also, the call writers are still aggressive at 18,400, 18,500 strikes, which clearly indicates that, these levels are likely to act as a, resistance for, near-term setup. So overall, as Nifty is trading below 18,450 level, we believe that some more pressure we can see in the near-term basis for the Nifty, and on the lower side, 18,200 and 18,000 are the next important level for the Nifty. Though overall long-term setup for the market is bullish, but for near-term perspective, we are expecting that some pressure we can witness in the market on the especially in the large cap stocks or index stocks. Even if we look at the Bank Nifty setup also, Bank Nifty is now trading below 43,600, which was very important level in the previous week, and we have given a breakdown of those level. So if we continues to remain below 43,600 level, then possibly Bank Nifty can also face some profit taking and or supply pressure. And lower side, the important support area for Bank Nifty is at around 43,000, 42,800, which are the important level for the near term basis. So for time being, we are expecting some profit taking we can see again on the higher side. So 18,450 is the important level. One needs to closely watch this level on the Nifty front. And for Bank Nifty, 43,600. Until these levels are not taken out on the higher side, again, there is a high probability we'll see a supply pressure on the higher side for both the indices.
Okay, understood that. We'll focus a bit on the pockets that are performing the most today. Let's start off with the auto space. That's the index that's risen the most in the first half of trading action today. Your thoughts in this entire auto space and this basket? Does it look promising from a medium to long-term perspective, or should one chase the momentum and be there only with this certain stocks here? Your thoughts?
Since last couple of month, we are seeing that most of the auto stocks are consolidating and has shown some corrective action. But if we analyze the overall setup for auto index, it's in bullish trend for longer term setup. Auto index is still holding up its breakout which we have witnessed in earlier month. So overall setup for automobile sector is bullish, but for near term to short term perspective, some profit taking or some consolidation we can see in the near term basis. But some of the stocks like Eicher Motor or Mahindra and Mahindra or Escorts, these all stocks are clearly in the bullish trend, and we are seeing buying interest again in this stock after a corrective action. So after a correction of almost for 2 months, now again most of the automobile stocks are showing buying interest at the lower level. Most of the automobile stocks are still holding their long term moving averages, which is almost 200-day moving average, and trying to get some buying interest from those level. So we feel stock like Eicher Motor, Escorts or M&M. These three stocks are looking positive and promising, and one can deploy buy on dips strategy in these three stocks especially.
Okay.
Rest of the stocks are showing different behavior. So again, stock specific we have to take call, but these three stocks which I mentioned are still in the bullish zone, and one can deploy buy on dips strategy in these three stocks.
Okay, understood that. There's one more pocket that has been buzzing, and from the last couple of sessions as well. I'm talking about the sugar stocks that have, in fact, sweetened a bit more today. Bajaj Hindustan, Triveni Engineering, Sri Renuka, even Rana Sugars. These kind of stocks are rallying up to 12% odd in today's trading action, and we've been seeing that these stocks are all in momentum since the time the government has indicated that it may consider increasing the sugar export quota for financial year 2023, that is April to June of next year. Rajesh, what do you think of the sugar space as a whole? Does it hold promise for the investors who've been looking to create a portfolio from the next year's point of view as well? Will buying at these levels really prove fruitful for all those investors looking to add sugar stocks to their portfolio? Look at the kind of stocks that are already on the upper circuit. Dharani Sugar on your screen right there. Rajshri Sugar up 19.9%. That's the kind of move that you're seeing. So mostly all the stocks are up in the green, and very, very sharp moves coming in. So after this kind of move, does it still make sense to hold on some of them?
So in earlier part of 2022, we have seen a strong rally in the sugar space, and post that most of the sugar stocks were under profit booking. But overall, if we analyze the long term setup for most of the sugar stocks are still holding their long term breakout levels. So looking at the longer term setup, we are still bullish on the sugar space, and a lot of buzz towards the ethanol blending and other things are playing out for this sector. So most of the stocks are holding their long term breakout levels. So we believe that the traction which we have witnessed in last couple of trading session can continue further, and the stock like Andhra Sugar, Renuka Sugar, Balrampur Chini, even Dhampur Sugar, these all stocks are looking very promising, and the kind of breakout we have seen in the daily as well as on the weekly chart, we believe that further more traction on the buying side can be there, and another 5 to 10% up move can be there in the stocks like Renuka Sugar, Andhra Sugar, Dhampur Sugar, and most of the mid cap or small cap sugar stocks are still enjoying this momentum. So we believe that whole sector is looking very promising. One can remain invested in the sugar space, and another rally can continue for further more upside in the most of the sugar stocks. So our preferred stocks from this space is Renuka Sugar. One can buy Renuka Sugar with stop loss of 55, upside target is 72. Andhra Sugar is looking promising. One can buy this stock also for upside target of 165 to 170. Stop loss can be placed at around 130. Balrampur Chini is also looking promising. 385 should be your stop loss. Upside target can be around 420 to 425. And Dhampur Sugar is also looking promising. Last week we have seen significant buying action, and stock is now forming higher high formation on the monthly as well as on the weekly chart. And the breakout which we have witnessed is clearly indicating that this stock Dhampur Sugar can continue its upward momentum towards 285 to 290. one can keep stop loss of 242.
Okay, so you've talked about how some of these stocks could actually rally further by 5 to 10% out from the current levels as well. You picked out some of your stocks and given the target prices too. But overall, for the next year, for financial year 2023, given this kind of a consideration by the government on the increase of the sugar export quota, in case this comes about, what kind of a rally could this really provide to the sugar stocks that have already rallied this much? How much more upside do you see?
So my belief is that this sector can again retest its previous all-time high like we have seen in the month of January February of 2022.
Hmm.
So almost another 15 to 20% upside we can see in coming months. So
Okay.
one should remain invested in most of the sugar stocks,
Okay.
and most of the sugar stocks are displaying the breakout on the weekly monthly chart, which is clearly indicating that again they will resume their uptrend, and they will able to surpass their previous swing high also. So our belief is that 15 to 20% really we can see in the coming month for this most of the sugar stocks from the current
Sure.
level also.
Sure. Okay, so we've talked about those sectors that are in momentum and showing a lot of promise where investors could remain invested and look at profits going forward from here. But there's one sector that has continuously been an underperformer in this entire year 2022. Now, the big question is, will it come out of the underperformance or is the pain likely to stay? I'm talking about the IT sector. Last week we did see about how HCL Technologies has come out with a revised lower guidance, and this time today we're getting the news that global giant Accenture has now warned about a possible pullback in the client spending, has also shown some disappointment in the quarterly earnings as well. Now, what does it really indicate for the Indian IT majors, all the bellwethers, Infosys, TCS, Wipro, and the likes of these kind of stocks as well? They have all seen sharp correction of about 30-40% throughout this year, and now these fresh warnings amid the slowdown that we're overall expecting in the economies, global economies as well. Could this actually point towards a long winter for the IT sector? That's what we want to focus on. Rajesh, first of all, your thoughts on the Accenture's guidance that it has given, the numbers that have come up about, and the warning of the pullback of the client spending. Is that going to be a major cause of worry for the Indian IT companies going forward?
So we have seen significant correction in most of the IT stocks, and if we talk about the IT index per se, the now IT index is near to its October low. And after this Accenture guidance, yes, there will be a hit on our Indian IT company also, as the client spending, they are showing concern towards the client spending side. So which is directly linked with the IT guidance going forward. So looking at this guidance, we believe that some pressure is likely to continue in the IT stocks. Most of the IT stocks are also started reacting to this news flow, and again, most of the IT stocks are now approaching towards their October lows. So if at all IT index breaks below 28 400, 28 300 level, 28,300 level, then possibly another 5 to 10% correction we can see in IT stocks from the current level also. Even from a stock specific front, like TCS is now approaching towards its October low. So for TCS again 3180 is the crucial level. If it's break below that level, then possibly TCS can correct towards 3000, even 2960 level, which is the next major support area for TCS. If we talk about Wipro is continuously underperforming. Despite of pullback in most of the IT stock, TCS Wipro was not able to cross even 400 level, and again we are seeing since last 3 weeks there is a supply pressure in the Wipro also. And now looking at the setup, if it's continues to trade below 395, 398 level, then possibly Wipro can face further more supply pressure towards 370, 365, which is the next level for the Wipro on the downside. Even on the Infosys, now stock is trading below its a 50-day moving average, which is clearly indicating that weakness is there on the near term setup. It's a third consecutive week where Infosys is making lower low formation. So it clearly suggesting that there is a sustained supply pressure on the Infosys also. And looking at the setup, if Infosys breaks below 1490 level, then possibly Infosys can go down towards 1440 to 1420 level, which is the next important level on the downside. So
Hmm.
most of the large cap IT stocks are clearly indicating that most of the stocks are trading near their critical levels. Another 1 or 2% downtick from the current level can escalate further more selling pressure, and we can see 5 to 10% correction in the continuation of this downtrend.
Okay, understood that. Well, Rajesh, now speaking about your stock specific recommendations, where are you really betting on for this week? Any top stocks on your radar?
So first stock is from the IT, from the automobile space. Looking at the Eicher motor is looking very attractive. If we analyze the daily setup, the stock was trading in falling channel, and the breakout on the falling channel is clearly indicating that there is a trend reversal is happening on the Eicher motor. In today's session also, there is a short covering action has been there on the derivative front. So looking at the setup, we believe that Eicher Motor can continue further higher towards 3500. One can buy and accumulate Eicher Motor with stop loss of 3300. Another stock is from Capital Goods, that is Siemens. Overall long-term setup for the Siemens is bullish. And looking at the monthly chart, stock is now giving a buying interest from its monthly chart support area of 2750 zone. So looking at the overall setup for the Siemens, we believe that this upward momentum can continue towards 3050 to 3100. One can buy and accumulate this stock with stop loss of 2850. So Eicher Motor and Siemens is looking attractive from short term trading perspective.
Okay, Eicher Motors, Siemens, those two stock picks from Rajesh right here. So keep an eye out on that. Rajesh, stay on with us. Tanya Aneja, my colleague, joins in with the list of the buzzing stocks at this hour. Tanya, take it away.
Absolutely, Sakshi. So let's start with KEC International first. So this stock is in focus today. The company has secured new orders worth 1,313 crore rupees across its various businesses. So on the back of this news, we have KEC International in focus today. We also have L&T shares as well. The company has signed an agreement to divest its 51% stake in L&T Infrastructure Development Projects, that is L&T IDPL, to Epic Concessions Private Limited. Also, Glenmark Pharma shares are trading in the green today. So the company said that it has received the final approval from the US FDA for its generic nicardipine hydrochloride capsules. And these capsules are used to treat high blood pressure. We also have Dilip Bilcon stock. So this stock is on a roll, and this is after getting flurry of orders. So on Thursday and Friday, the company received 4 orders worth 6,167 crore rupees. So positive for this counter as well. On the flip side, we have PTC India. So shares of PTC India are under pressure today. According to some reports, the public sector undertakings are actually looking to sell their stake in this particular company. So according to the report, Power Grid Corporation of India, PFC, NTPC, NHPC, they are all they have decided to sell their stakes in this company after allegations of a lapse in corporate governance surfaced. Lastly, we have Sun Pharma as well. The shares of Sun Pharma are trading lower today. So the firm said that its Halol, that is Gujarat facility, has received warning letter from the US FDA regarding the inspection conducted from 26th of April to 9th of May. Back to you.
Right, thanks, Tanya. Any of the stocks from this basket, Rajesh, that interest you, that you believe that could actually show turnaround or momentum on the upside from here?
So KC is looking attractive. If we analyze the weekly setup, almost stock is on a verge of giving a breakout on multiple resistance zone on the weekly chart. So looking at the KC, we believe that if the stock continues to hold above 465 level, then possibly stock can scale up further higher towards 520, which is the next target. Another stock which is looking attractive, that is L&T, is also looking attractive. Stock is in uptrend. Strong buying action we have seen in last couple of months. Since last 2 3 weeks, stock is consolidating. But looking at the overall setup, we believe that stock risk to reward point of view, stock is available at very attractive price on the daily as well as on the weekly chart. So looking at the L&T setup, we believe that this stock is available at very attractive level. So one can buy L&T also for upside target of 2240 to 2260. One can keep stop loss of 2120. So these two stocks are looking promising at the current juncture.
All right. Well, thank you so much, Rajesh, for being with us and sharing your insights about the market's outlook and several sectors and stocks that we've just discussed. And with that, we look at the markets trading at this point in time, closing in on that 1 o'clock mark. Let's look at how the markets are trading. We've come off the day's high point. We're up by 0.4% still. 227 points up for the Sensex. 61,572 is the level at which it is trading at. The Nifty moving up by 77 odd points. There's an uptick of 0.4% odd. 18,345 still being sustained on the Nifty, but we have definitely come a little bit off that high point of the day. So what is that is creating pressure? Well, if you see in terms of the sectors, it is clearly one more sector that slipped into the red, and that's the Nifty Pharma. Clearly some of the stocks which Tanya also pointed out, like Sun Pharma, those are dragging the street at this point in time. So apart from the PSU banks and the IT space, it's the pharma space that's quickly dragging. You can see that move on the downside in just the last 15 minutes odd, and that's creating some bit of pressure. But will the markets bounce back from here? We're still looking at the advanced decline ratio tilted towards the bulls at this point. 35 stocks of the Nifty 50 still in the green, 15 stocks in the red. But will we see this sustained momentum towards the end of the session as well, or we will continue to watch out for that 3 p.m. mark as well, when we have seen sharp moves on either of the side in the previous few trading sessions as well. So keep an eye out on that, and we'll see you very, very soon with more updates about the stock markets. Don't forget to subscribe to this channel and also stay connected with us through all our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in on this edition. Equity on your mind? Confused about what to pick and when is the right time to exit the stock? All your questions will be answered. Log on to Business Today TV.